All right, welcome everyone. Just gonna wait a couple more minutes for some people to join. Then we're gonna go over 8 stocks that I think can make for some very solid trades coming up in the future. And I'm excited to go over all of them. Let's see. Probably give it about 1 to 2 more minutes, and then we're gonna jump right into it. So just a little bit of patience here while the last bit of stragglers make their way in. All right, so it's 5:04 now. I think we'll start at like 5:06. So just give it another 2 minutes. Don't want people to join a minute or two late and then miss the whole concept of the stream. Hey Lala, so don't worry. We're gonna do another one tomorrow where we go over, people's homeworks and see what they got right, what they did wrong, which obviously will help everybody else understand the live trading aspect better. So don't worry if you missed today's stream. We're definitely going to do it again this week. We only went over about like 7 or 8 homeworks, so still plenty of them to go over, and everyone will be able to learn from those. All right, we're going to start in less than 60 seconds. Okay, let's get started. So just a little, preemptive. Yeah, the video of today's live stream will be posted after. So for all these plays, again, some of you guys may like playing them with shorter dated options, which obviously I don't recommend unless it's a small size. For all of these plays, the way I view it is obviously longer dated options are the best. So October, December, January, figure in that range. And this way, you don't have to actively be trading it, but you could actively hedge for downside. So for example, if I buy, let's say Affirm is trading at $17 and I buy October 25 or $20 calls for October, then if I see Affirm isn't doing too great next week or the week after that or the week after that, I can sell $21 weeklies every single week and just collect premium while I wait for the trade to develop. So definitely for all these plays, if you try to mess around with weeklies and you lose your money, it's your own fault. Of course, sometimes we can time these things very well. For example, when we have put sellers, which we'll get into in the stream. But in general, the only way I'd recommend playing any of these, if you want to play them at all, is either with longer dated contracts and stop losses under specific triggers or on bearish trigger crosses. And the second thing I would say is selling puts can also be a highly profitable strategy. So not every time we're bullish on a stock do we have to buy calls, because remember, buying calls, you only make money if the stock goes higher. By selling puts, we make money if the stock stays flat or if the stock goes higher. So there's another way to make money by selling puts than there is by buying calls. So again, that's the 2 ways I would trade any of these, is by either taking longer dated call position, and then every time the stock looks ugly in the near term, I would hedge for downside by either buying shorter dated puts or by selling calendar spreads, so by selling closer dated calls, or I would sell puts on these stocks and hope to collect the premium down the line. Put spreads work as well. So without further ado, let's jump into it. The first stock I want to discuss is Affirm. So let's bring it up on our chart. And we'll be looking at it from 2 different viewpoints. We'll be looking at it from an LDPM viewpoint, and we'll be looking at it from a trigger viewpoint. So from a trigger standpoint, we can see that Affirm is in a pretty large air pocket with the hourly trigger and daily trigger crossing above the weekly trigger. And we see we get that retest of the weekly trigger, which bulls were able to held and bring the stock back higher. And now we have the hourly trigger above the daily trigger above the weekly trigger, with the monthly trigger a cool 160-ish% above price. So obviously, if a firm were to go up and reach its monthly trigger, this would be some huge gains. So the way I look at it, first, obviously look at the trigger setup. So, for similar concepts of the hourly trigger crossing, then the daily trigger crossing, then price exploding to its monthly trigger, we can look no further than Roku, which of course took its merry time, but eventually hourly trigger, daily trigger crosses above the weekly trigger. You get that back test of the weekly trigger, and then you can see price exploding higher to attack its monthly trigger. And, very similar to Affirm, I would expect a similar sort for price to eventually be able to rear up and attack its monthly trigger. Now, looking at it from an LDPM standpoint, the most bullish LDPM orientation is when you have, so we'll go a little back. The yellow is the 2-week LDPM, the orange is the 1-week LDPM, the blue is daily, light blue is 4-hour, and green is 1 hour. And when the time frames are stacked, yellow, 2-week on the bottom, then 1 week, then daily, then 4-hour, then 1 hour, that's always the most bullish. So for Affirm, for example, when we could see here where the 2-week was on top, and then the 1 week was on bottom of that, and then the daily, then the 4-hour, then the 1 hour, price moved to the downside because that is the most bearish LDPM configuration. But here, Affirm was able to turn its LDPMs into a bullish orientation whenever the lower time frames are on the bottom, moving up to the whenever the higher time frames are on the bottom, and then from bottom to top you get lower time frame, lower time frame, lower time frame, lower time frame. That's going to be the most bullish. And so as long as price remains above its 2-week LDPM on the bottom, we're going to expect continued price appreciation. Now, when we look at Affirm in the data, because of course, just looking at triggers and LDPM isn't enough, we always have to make sure that VOX is also telling a story. And so when we look at VOX for Affirm, we can see that it had a pretty basic year in terms of VOX, largely being in stability and then propagation zone, but hasn't really spent too much time in the inhibition zone. Recently, we can see that Affirm's VOX is now spiking into the inhibition zone. And, there was multiple spikes, which basically happen when the stock moves well above its upper bound or lower bound intervals. So every day, price is meant to move between its upper bound and its lower bound interval based on a lot of different factors. But in short, if price breaks above its upper bound interval, it causes, large unwarranted reactions in the market that the market wasn't expecting and the market wasn't ready for. And when price does move well above its upper bound or lower bound interval, it causes a VOX spike, which is usually telling you that the move is not being tolerated at all by the market, and we can expect downside shortly after. So Affirm, even though VOX moved into the inhibition zone, there's been a lot of spikes telling us that, when Affirm starts moving, it moves 10% in minutes, and then, moves 15% to the downside in minutes. And so, the moves higher aren't being tolerated super well right now, but price isn't, getting crushed to the downside. So as long as VOX trend, which is, the yellow line, the running average of VOX, remains in the inhibition zone, upside is expected over time. And so when entering Affirm, we could see here when VOX trend moved into the inhibition zone, followed by some really nice upside. But once VOX trend moves out of the inhibition zone, that's really the transition from bullish to bearish. We could see it again here, VOX trend moving out of the inhibition zone into stability, and followed by some large downside on price. So going here into Affirm, I view this as a really good long trade as long and until VOX trend does not move back into stability. So if I were to go long this stock right now, or I would sell puts on this stock, or I would sell put spreads on this stock, I just monitor VOX on a nightly basis, and as long as VOX trend remains in the inhibition zone, I would expect continued upside. For example, if we look at a stock like Spot, you can see VOX trend moves into the inhibition zone and stays into the inhibition zone for a long time, and throughout this time, Vox trend moved into inhibition when price was 91, and at the peak, price was able to reach 179. And if we went long this stock back then, we would have been long as Vox trend remained in the inhibition zone, which was all the way till price moved to 179. So price moved over 100% to the upside once Vox trend moved into the inhibition zone. Now, of course, once Vox trend moved back out of the inhibition zone, right here, back into stability, was followed by downside. So going back to Affirm, as long as Vox trend remains in the inhibition zone, I like this long play. Now going back on the chart, we said that the LDPMs are stacked bullish. The triggers had some bullish crosses showing bulls kind of taking control on the battlefield right now. And, you know, in the Discord, we have Gavin's levels to trade this live, which, as you can see, are working very well so far. But in general, I would expect this stock to start to move to the upside at some point and attack the monthly trigger. Affirm is one of the harder ones to track. So what we would do is we would wait until you get a lot of sold puts in, which seems like that happened on Friday. And then, you know, monitoring the sold puts, we could also see that 80% of bought puts were closed on Friday. So it looks like bears kind of threw in the towel on Friday, while bulls got a little more aggressive. All good signs for the stock to continue higher. Snap graphs are all pointing bullishly. The heat map shows purchasing support above. So if price can move up, we can maybe expect the movement to be accelerated a little bit higher. So that's my thesis for Affirm. Now, the invalidation for this play would be if the hourly trigger right here. 1 second. There's usually a way to take off the price. Doesn't look like I can here. Either way, the invalidation for this trade for me would be if the hourly trigger crosses back below the daily trigger. So in terms of risk and reward, if that bearish cross would happen, we're talking about a loss of, let's say, 7-8% on the stock. So options would take a nice hit. But on the other side, in terms of reward, we have 160% to the upside. So 16-to-1 risk reward seems like a solid trade. If I get stopped out, I'm going to live with the results. Of course, while price is below daily LDPM, which is this blue line, I can hedge my position by selling closer dated covered calls against my longer term calls, or I can buy puts to hedge for short term downside while staying long. So there are definitely ways to stay long without having to lose money while price is moving down, which of course will all be taught in the bootcamp. But otherwise than that, Affirm looks bullish to me for the long term, and I would love to build some long exposure in this stock. So let's move on now to Asana. And Asana, very similar situation. You can see the hourly trigger and the daily trigger crosses above the weekly trigger. Price gets that back test to the weekly trigger over here. And now it looks like price can move up and attack the monthly trigger at 33. We can see Vox. We have Vox trend is in the inhibition zone, and it looks pretty healthy in the inhibition zone. And now it's even starting to turn up again right here. So without paying attention to individual day-by-day Vox behavior, it does seem like Asana's Vox is very comfortable in the inhibition zone, and so I would expect price to continue moving up to the upside. Now, again, a stop loss here would be, if the hourly trigger crosses below the daily trigger, or if price breaks through the weekly trigger to the downside, but all signs are pointing towards Asana attacking the monthly trigger up at 33. So if we take a look at it over here, we can go and check our LDPMs. And as you can see, LDPMs are stacked bullishly, where you have the 2 week on bottom, then the 1 week, then the daily, then the 4 hour, and then the 1 hour. And so to me, it looks like Asana will be able to move bullishly to the upside. You can see once price gets these bullish LDPM crosses, this was down here at 17, price was able to move all the way to 26, which is a $9 move higher from the 15th of May to the 15th of June in the span of 1 month. So you can see the power of, the LDPM setups. And once you have the higher timeframes on bottom and the lower timeframes on top, usually the stock will be able to continue trending in that direction without paying attention to the day-to-day and the minute-by-minute and the hourly to that and the hour-to-hour. You can see that, when the LDPMs are bearish, price moves to the downside. When the LDPMs are bullish, you get some really nice price action. And so while the LDPMs are in a bullish configuration, and especially when the triggers are in a bullish trigger orientation, and VOX is, relaxing pretty much in the inhibition zone, all signs point to Asana attacking the monthly trigger. How to play this, that's really up to you. Where you want to place your stop loss, whether you want to be long above the hourly trigger, but if price moves below the hourly trigger, you'd be flat, meaning you wouldn't have a position at all. Whether you want to stay long as price does not crack below the weekly trigger, regardless of how specifically you want to play it, whether you want to sell $20 puts for the next month, which I'll just check right now how much profit there is to be made from that. So if I go to Asana and I go to the, let's say, August 18th puts, so I can sell August 25th, let's say. So I can sell the $20 put for $25 right now. So, Asana clearly catching support on its 2-week LDPM here, everything bullish. So without even looking at price again over the next month, I can sell the August $21 put for $45 and buy the August 20th put for $25. So I'd be making $20 per put spread, and as long as price is not below 21 in 25 days from now, I'd be making $25 per put spread that I sell. So when I look at Asana here, the odds that price is going to be below 21 within a month seem pretty low to me. And even if I get a nice upside reaction to 25, 26, I can buy back both those puts for a really nice profit, maybe 50% gain, 75% gain. So that's where I like the strategy of selling puts. Moving on to the next play, Peloton. So this one is really juicy. A lot of things going on here, and we're going to jump right into it. A lot of things going on here. Peloton has unbelievable potential, and long exposure very soon is going to be a must as a trader, as a breakout trader. So let's just take a look at what's going on exactly. All right, move this. And of course, whenever we analyze a stock, we want to analyze it on the largest time frame and work our way down. So Peloton, we can see at one point was all the way at $168. Now the stock is hanging out at the $8, $9 range. And when we put on our monthly velocity, we'll notice something very interesting. So we can see that monthly velocity put in its lowest low here. Then price has just been in a sideways channel since then. The monthly velocity is repairing very nicely. So monthly velocity, while price is moving sideways, is repairing, which is a sign that bulls are stepping in here and they're buying the stock. Now, there's a huge air pocket between the weekly trigger and the monthly trigger. So, of course, we know the weekly trigger is a really big acceleration level. So if price and the hourly and the daily trigger can get through the weekly trigger, we would expect price to make this huge move higher, 185% move higher, and attack $26, the monthly trigger. So now that we know what the triggers look like, we would have to make sure things on LDPM make sense and the data makes sense as well. So we see Peloton here try to break through the monthly trigger once, twice, 3 times, and fail each time. Now the first time after the fail, it got sold right back through the daily trigger, and the second time came back, held support at the daily trigger, rejected the weekly trigger again, and again held support at the weekly trigger. Now, what you'll notice throughout these 3 rejections was that the weekly velocity, even though price has not been able to get through the weekly trigger, the weekly velocity has been getting better and better and better and better to the point where this Friday, it's only barely negative anymore. In comparison to previous rejections when weekly velocity was pretty strong to the downside, now it is barely negative, allowing the possibility for price to break through this weekly trigger. And once price breaks through this weekly trigger, if the hourly and the daily can get above as well, then we can see a humongous move higher to $26. So even though these were rejections, it really helped improve the negative weekly velocity. And now sellers at the weekly trigger are much weaker, allowing for price to break above. Now, if you go to LDPMs, we can see that we're not fully bullish yet. To be fully bullish, we would want the 1-week LDPM, which is this orange line, to cross above this yellow LDPM, which is the 2-week. So, you can see here, which is the most bearish LDPM configuration with the 2-week on top, then 1 week, then daily, then 4 hour, then 1 hour. That's the most bearish, max bearish LDPM configuration. And price moves down from 11 all the way to 6. So almost getting cut in half. Now we can see that the LDPMs are really close to flipping to the most bullish. And LDPMs, when they're in the most bullish configuration, it means a lot. It's telling you that the bid, stocks trade with a bid and an ask. When the bid is overpowering the ask, stocks move higher. When the ask is overpowering the bid, stocks move lower. And so when it's in the most bearish LDPM configuration, it's telling you that the ask is just aggressively attacking the bid again and again and again, pushing the stock lower, because the people that are willing to sell are willing to sell anywhere, and the people that are willing to buy are only willing to buy at lower levels, and so the stock gets hammered. When the LDPMs flip bullishly, it tells you that people are willing to bid higher and higher and higher and higher. So even if the stock is at 871, for example, I'm willing to bid 880, I'm willing to bid 890, and the sellers, they're not being aggressive at all. That's what the LDPMs are telling us by switching to the most bullish configuration. We would expect price to be able to continuously attack the upside. Now, timing-wise, it can be difficult to time these moves unless you have access to the deep dive stocks data. And when we look at the deep dive stocks data, it tells us something very interesting. If you didn't get anything out of this entire stream, hopefully you'll get a nice laugh this week when you see Peloton probably rip to the upside. So we saw a 1,660% increase in sold puts. So we look at them, and we could see, well, can't really see exactly, but you can also see that 90% of bears went ahead and closed their bought puts. So there was a lot of puts being bought over the past 10, 5, and 1 day, and 90% of them were closed on Friday, while 1,660% increase in selling puts. And if we look at the heat map, again, it's an unstable configuration, but if price moves higher, it can move right into purchasing support. Moving up, snap graphs are all bullish. And VOX, although VOX trend cracked into stability right here, it looks like, if you just look at price, it looks like we already had the effects of VOX moving from inhibition back into stability. You can see all that downside that happened from 978 all the way down to 831. Now it looks like VOX rounded out and is on its way back. So if on Monday, VOX can push through back into the inhibition zone, can help lift VOX trend back into the inhibition zone. You guys can see when VOX trend is in the inhibition zone, price is able to move really nicely to the upside like it did here. VOX moved into the inhibition zone and price was at 812, and price was able to move all the way up to 16, doubling in price. So again, VOX trend moved into inhibition here, but got knocked down. Already saw the downside effects of getting pushed out of inhibition, and now it looks like VOX and VOX trend is going to turn higher, break into the inhibition zone, and again, with this huge increase in sold puts, it looks like bulls are getting ready for this stock to move higher. We'd also want to check Thursday's data. Yeah, so Thursday's data showed relatively flat action, and then Friday we see a massive increase in put selling and all the bought puts being closed out. So it looks like bears basically packed up, and it looks like bulls are swooping in selling puts there. So again, it doesn't mean you have to go long the stock. For me personally, I like the idea of selling Peloton puts because I have such a super tight risk and validation. So if I sell Peloton $8 puts for next month, if price breaks, if the hourly trigger crosses back below the daily trigger, I can always buy those puts back for a teeny loss. But if price does what I think it's going to do, which is going to rip up to the weekly trigger, get that bullish LDPM cross, then my puts will more than likely expire worthless. So that's for Peloton. It seems like it's very ready to make that nice move to the upside. Now, Gavin does have a very important level at 982. So that's just something to keep in mind. But again, in order for confirmation that Peloton is going to make this big move, we would want to see the 1 week LDPM cross above the 2 week LDPM, and we would want to see VOX and VOX trend move back into the inhibition. And then once that happens, just like here, you can pretty much hold the position stress-free until you see either a couple of things, massive amounts of these sold puts being closed out. So if you see minus 90 over here, it means that they think that they reached the max possible upside, or we can look for VOX divergences, or we can look for velocity divergences, or we can just sell the position eventually once price breaks back down below the hourly trigger. Plenty of options. All different kinds of options, how to trade exactly, are being taught in the bootcamp in week 4. So just be patient for those. PayPal, another very interesting one. So again, we went over Affirm, went over Asana, and we went over Peloton. Now let's Yeah, and now let's move to PayPal. So PayPal, again, another very interesting one. These setups are like, almost too good to be true, but there's just so many of them right now. So again, PayPal breaking above its weekly trigger after, let's see. Yeah, so PayPal has been below its weekly trigger for a long, long time, as you guys can see. I mean, this stock has just suffered brutally below its weekly trigger. If you guys remember, let's say funds took out short positions on PayPal when price broke below the weekly trigger up here at 264. And so if they see price start to break back above the weekly trigger and they know that bulls are about to take control over the stock, that's when they're going to start covering the short positions. And once they start covering the short positions, it gives the price that nice little acceleration to the upside, which will usually be followed by FOMO, just buying pressure, high volume, and price is usually able to attack the monthly trigger. Now, again, if they went short when price broke below the weekly trigger at 263, even if by covering they end up pushing price all the way to 85.90, they still made plenty of profit. And so I don't think they would be worried about anything like that. So you can see rejection, 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 rejection. And finally, after many years, PayPal is on its way to, releasing back above the weekly trigger. Now, confirmation for price to be able to attack the monthly trigger usually happens after the daily trigger crosses the weekly trigger, but we would also want to see if there's enough bullish monthly divergences for price to even want to attack the monthly trigger. And as you can see, the most extreme monthly print was over here, and price was able to make a bullish divergence by making a new low while velocity did not, and another bullish divergence here while making a new low while velocity did not. And so after this long period of sideways consolidation, monthly velocity has been continuously getting better, telling us that this dip has been accumulated, because if there wasn't buying here, monthly velocity would be getting worse and worse, not better and better. So the fact that monthly velocity is moving higher like this while price remains in this range tells us that this dip is being accumulated. And now we can expect, once the daily trigger breaks above the weekly trigger, for price to accelerate higher to the monthly trigger. Now we're going to want to check our LDPM setup. And as you can see, LDPMs have recently moved into the most bullish configuration, with the 2-week on the bottom, followed by the 1-week, followed by the daily, 4-hour, and 1-hour. And so for PayPal, based on our triggers, based on LDPM, we would pretty much start to expect really bullish price action going forward. And again, very possible for price to move all the way higher to 110, which is a $40 price increase to attack its monthly trigger. Now, we also have to make sure that VOICs make sense. So over here, we can see where VOICs trend moved into the inhibition zone. Price was 63 at the time, and clearly VOICs trend being in the inhibition zone seems to be liked by price, as in price is able to make this strong upside move while VOICs trend is in the inhibition zone. And so as long as VOICs trend remains in the inhibition zone, there is no reason to assume that PayPal will stop moving higher. So VOICs trend remaining in the inhibition zone, when there are sharp VOIC spikes, we can expect a day or two of downside. All that means is that PayPal moved well above its expected price range for the day. And so when that happens, it's not really tolerated well by the market usually. And so it'll be followed by some downside, sort of like a mean reversion back to the normal. But in general, even though we'll see those spikes and price will suffer a little bit of downside, as long as VOICs trend remains in the inhibition zone, this is a great long. If VOICs trend moves back into stability and exit the position, maybe at a small loss, but risk to reward seems obviously worth it here, especially if we wait until the daily trigger crosses above the weekly trigger and then just place a stop loss below the weekly trigger with longer dated call options. Now, obviously, we're going to want to see if we can time this move well. There has been a lot of put selling recently, and the put sellers have not closed out yet. So that seems like a good sign that the put sellers think that there's more upside coming. So the last column, as you all know, is the change in the past 10 days. So over the past 10 days, each and every day, there's been about a 224% increase in sold puts. Over the past 5 days, there's been a 350% in sold puts. And in the 1 day, only 2% of them were closed out. So keep moving back, see where those puts were sold. Here they were. So on Wednesday, price closed at 73.43, and we saw a humongous increase in sold puts. And price is not really that much higher than when those puts were sold, meaning as long as these put sellers don't close, which we saw on Friday, they have not closed yet, we would expect only 9% of them closed. As long as those put sellers don't close their puts, we're going to expect much for their upside. Once they sell their puts, that's when we know that they've reached the upside that they've expected, and then maybe we can expect a retracement, but the end result will more than likely still be a trip back up to its monthly trigger. Let's move on now. Rocket. So I've been bullish this for a long time. And again, you see a very similar pattern as we saw in all the rest of the stocks. So let's just take a look at this. And again, just keep in mind, the higher the short interest and the more volatility known about the stock, the crazier the reactions will be when price breaks above important triggers. So for example, over here, way back when Rocket first was released and price broke through the weekly trigger, there was extreme acceleration to the upside. So if you know a stock has a history of that, then it can be a lot easier to take positions in them because things can get crazy. So you can see the constant rejections of the weekly trigger nonstop. But then recently, over the course of the past year or so, or 1, 2, 3, 4, 5, 6, 7, 8 months, monthly velocity has been repairing while price had been relatively flat. Then price finally started to move to the upside again. Now, again, this was just a simple hourly trigger, daily trigger cross. Had a retest here and had a nasty fake out here. In general, you won't see such fake outs. Like this would have been a stop out. But then once the hourly trigger and daily trigger crosses back above, you get that really nice push to the upside. Price is at 1083. The monthly trigger is at 1232. And if we look at our LDPMs, everything is going to look bullish. You can see, again, most bullish LDPM configuration, as long as the 2 week right here is where the cross happened. So when you have the 2 week on bottom, and then the 1 week, and then the daily, and then the 4 hour, and then the 1 hour, pretty easy for price to move to the upside, as this is telling you that the bid is just dominating over the ask, and that people are willing to just keep moving their bids higher to buy the stock because they just want to purchase it, and the ask is just getting destroyed, causing price to continue moving to the upside. Now, when we take a look at the data for Rocket, we see some interesting things. So one, we can see that in the past, when VOIC's trend moved into the inhibition, for example, it moved into inhibition right here when price was at about 825. It was a really nice move to the upside all the way till 1078. So again, it's a $2 move higher. And then now VOIC's trend has moved into the inhibition again, and price is pretty much getting that same positive upside reaction as last time VOIC's trend moved into the inhibition. So again, over here, as long as VOIC's trend remains in the inhibition zone, we would continuously expect bullish price action, and we would want to sell this position once VOIC's trend moves back into the stability zone. Now, if we go down to our put sellers, we see a huge increase in puts being sold, a huge increase in calls being bought. And again, calls were being bought over the past 10 days, over the past 5 days, and on Friday. Puts were being sold over the past 10 days, over the past 5 days, and on Friday. And puts, even though there was a 97% increase over the past 10 days, over the past 1 day, meaning on Friday, we can see that most of them were closed off. And so it looks like bear has packed it up. It looks like bulls have been aggressive over the past 10 days, extremely aggressive, not only selling puts, but also buying calls. And so when I look at that, I think to myself, maybe the target here isn't the monthly trigger. It actually looks like bulls are trying to take this right through the monthly trigger. And with the LDPM stacked bullishly, I would just want to be holding Rocket for a very long time until and unless VOIC's trend moves back into stability, where I would then expect downside. So Rocket looks like a fantastic long to me. Only a couple more, so let's just get through them. We only have Sofi, STNE, and Zoom. So let's start with Sofi. Okay, so just reading a comment. Price has nothing to do with the VOX zones or anything like that, or moving with VOX trend. The price is totally irrelevant for this chart. The only thing that should be paid attention to is VOX and where it is in which zone: the inhibition zone, the stability zone, or the propagation zone. Price itself is just, it happens to be here, so you could see what happens to price when VOX moves into specific zones, but don't put any weight or importance on where price is on this chart. Only for VOX. So let's look at Sofi. Again, very similar setup to Rocket. Used to be at much higher price points, got whacked at some point, stayed below the weekly trigger the entire time, rejection, false breakout, came back down, and now looks like it's coming back again. Now, you could see that when there was an hourly trigger crosshair and a daily trigger cross, price responded very well by attacking the monthly trigger, got rejected, and what you always want to see on monthly trigger rejections is how far do they smash it. So on this monthly trigger rejection, they were able to smash it, but bulls picked it right back up again at the daily trigger. Tried to go higher, came back down, bulls picked it right back up at the daily trigger, pushed back to the monthly trigger, they sold it down again, and again, bulls picked it right back up at the daily trigger. So what this tells me is that with each rejection of the monthly trigger, bulls continuously pick up price, and you can see with monthly velo is now barely negative anymore. And so during this month, the rejections made sense, but now that monthly velo is barely negative and the month is almost over. So when we finish this month in a day or two, in August, monthly velocity will be barely negative at all, allowing for price to get above the monthly trigger. Now for Sofi, you could see how well it responded when price broke through the weekly trigger. I would expect a very strong and powerful move when price breaks above the monthly trigger. And when we look at our LDPMs, of course, things look extremely bullish with here was the original cross, and then you have 2 week on bottom, followed by 1 week, followed by daily, 4 hour, 1 hour, and now it looks like the stock will continue trending higher for the foreseeable future. So how would I play this? Same as all the other ones. As long as VOX trend remains in the inhibition zone, I would expect continuous price increases, and I would expect price to continuously climb to the upside. Well, we don't have VOX trend here because it's a newer stock, so it needs more time for VOX trend to be calculated, just like the monthly trigger is barely calculated and the monthly velocity is barely calculated because the stock only IPO'd in December 2020. However, with VOX itself in the inhibition zone, you could kind of use the running average in your own mind and pretty easily see that VOX trend would be in the inhibition zone. Now we go down to the options positioning, and we can see, again, a really nice increase in sold puts on Friday and 92% of puts being closed. So again, looks like bears are packing it up and looks like bulls are stepping in. And so for me, when I see something like that, I really like the idea of being long this stock as long as the hourly trigger remains above the daily trigger. If the hourly trigger were to cross below the daily trigger, then I would sell the position. But as long as the hourly trigger remains above the daily trigger, I think price is going to attack the monthly trigger and break right through it due to the fact that the LDPMs are stacked so bullishly, due to the fact that VOX is, in the inhibition zone and pretty much chilling up there. And of course, while VOX is in the inhibition zone, we're going to expect further price increase. And thanks to our put sellers coming in on Friday and the puts being closed tells me that upside should be expected. Now let's go to Zoom, ST&E, and then we'll wrap it up. So for Zoom, again, another one with incredible potential. So for Zoom, you can see some really clear bullish divergences. We know that monthly velocity put in its extreme print right here. And since then, price made 1 lower low, 2 lower lows, and 3 lower lows. So we now have 3 bullish monthly divergences, and we know price wants to attack 119. And price also got the hourly trigger above the weekly trigger, had the retest, held on to the daily trigger, and exploded higher. Now, if you look at this, you'll see that upside, pretty strong. Downside is like corrective, like is taking its time. And then upside is just boom. So when you have like a strong move, and then downside is like slow, and then price just explodes back to the upside, it's obvious that this is impulsive and this is corrective, and the real price action is going higher. So again, all signs point to Zoom exploding higher to its monthly trigger at 119. Definitely, long-term exposure is kind of a must here. And once the daily trigger crosses above the weekly trigger, as long as price does not crack back down below the weekly trigger, it looks like Zoom will end up trending higher all the way until it hits its monthly trigger, maybe within a couple of months. If you look at our LDPM setup, you can see this bullish cross is what put LDPM into the most bullish configuration, with the 2-week on bottom, then the 1 week, then the daily, then the 4-hour, then the 1 hour, and we would expect price to continue to rise over time. If you look at VOX and our options table, we can see VOX trend is very nicely in the inhibition zone. Now, Zoom, when it did move to the upside, moved way above its expected price range. It moved like 5 or 6 days of volatility in one day, which caused a gigantic VOX spike, which resulted in some downside. But then again, after that downside, VOX was able to move right back to the upside, and we see VOX trend. The main point is that VOX trend is in the inhibition zone, and we should expect continued price increases. Now, you can see VOX was relatively stable throughout the whole year, and then recently, all of a sudden, it's starting to turn up, and this is just indicative of bullish action going on in the stock right now. And with VOX erupting like this, as long as VOX trend remains in inhibition, I would expect more price upside. You can also see put selling over the past 10 days and 5 days. So these put sellers in majority have still not closed, meaning they're more than likely expecting more upside. So again, Zoom, once the daily trigger can cross above the weekly trigger, I would expect price to be able to move up to the monthly trigger. And for our last one, let's look at STNE. So STNE has the perfect bullish LDPM configuration: 2-week, 1 week, daily, 4-hour, 1 hour. So we can see bulls really are liking the stock and just want to keep buying and keep buying and keep buying. We know we have the monthly trigger up at 1893. We got the hourly trigger cross, the daily trigger cross, the retest and hold of the weekly trigger. And now it looks like price is on its way straight up to the 1893 monthly trigger. We can also see from our monthly velocity that as price was in this sideways channel, monthly velocity had been repairing at a rapid pace, telling us that this dip was being accumulated, and now it looks like price is finally ready to attack its monthly trigger. When we look at STNE's VOX, we can see VOX is just, remaining in the inhibition zone. And throughout this entire time period that VOX trend has been in the inhibition zone, STNE was able to rise from 887 all the way till 1381 so far. And VOX trend had never left the inhibition zone. So as long as VOX trend remains in the inhibition zone, this goes to show you that you can just hold on for more price appreciation with no need to sell until and unless VOX trend moves back into stability. And with VOX trend moving even higher and higher into the inhibition, it'll take more and more to get VOX trend back into stability. So it looks like this can be bullish for a while here. Again, when VOX trend is over here, it's a little more worrisome because a couple of days of downside can bring VOX trend back into stability. But when VOX trend is super high like it is here, it's going to take a lot of downside to push VOX trend back into stability. And so it's even more so confirmation that we can be expecting future price appreciation. Again, huge put selling over the past 10 days, over the past 5 days, and especially on Friday, while most puts were closed off. So a common theme with all the stocks that we've been showing today is that VOX trend is instability. There's huge air pockets up to the monthly trigger. LDPM configuration is all bullish or about to be all bullish. The daily trigger is either above the weekly trigger or about to cross the weekly trigger, and VOX trend is just chilling in the inhibition zone. So all of these stocks look really good to me. My plan is just to sell puts every week, put spreads on all of these stocks. Maybe I'll grab some long-term exposure, but in general, for me, it's just about selling put spreads and collecting the premium at the end of the week, or just naked puts, because none of these stocks would I mind holding on for a long time, because even if I get assigned, I'll just sell calls until I make back all the money from that premium. And then if I get assigned on the calls, I'll sell puts again, basically like the whale strategy. So that's all I got for you guys. Zoom, STNE, Sofi, Rocket, PayPal, Peloton, Asana, and Affirm. And in about a month, I'll make another video and we'll check back on all of these and see how well they did. If any of you guys have any questions, I don't mind taking them here. If you guys enjoyed the stream and you could like the stream, I would appreciate that. Trying to grow the YouTube channel just a bit, but no pressure, obviously. And then, of course, if you guys have any questions, I don't mind staying on for a little longer to answer all of them. Thank you. Thank you, guys. Anthony, O10, MK, Beavis, Mr. McLean, Andrew, Karen Veer. Thank you, guys. LDPM lines are in this coming week of the bootcamp, correct? Okay, that's a good question. STNE, does it worry you that VOX trend spiked so high, signifying down before up? No, I don't think so. I don't think so at all. It's a great question, though. VOX spike, I would be a little bit more concerned, but when VOX trend is moving higher, that's just a bullish indicator to me. Thank you, Ashish. I appreciate that. I'm not going to look at other stocks now, but if you're in the bootcamp, message me there, and maybe we'll take a look at it later. I'm talking about more questions like specific to the stream. Okay. All right, guys. Thank you so much for everyone that tuned in. And I'll post the video in case anyone came late or missed it. PayPal and SoFi earnings this week, FYI. Okay, yeah, that throws a wrench in it. If I had to guess, I would say both of them will probably beat just based on like the data that we're seeing. I would think price will move higher, but I definitely wouldn't play earnings at all. Actually, PayPal and SoFi, because I have a longer term bullish approach, I would sell puts before earnings. If price stays flat or goes higher, I'll keep all the premium from the puts. And if price goes lower and I get assigned on the puts, I really don't mind because right now, PayPal, I would not mind holding shares because I think it's going to 110. SoFi, I wouldn't mind holding shares because I think it's also going much higher. And if I get assigned, worst comes to worst, I'll just start selling calls every single week above my cost basis. And within a short period of time, I should make back any kind of loss and then start making profit. All right, guys. But yeah, always be careful about earnings. I definitely don't like swinging or holding any calls over earnings. So if I had to play it, I would sell puts instead. And if I get assigned, I don't mind holding the stock. All right. I'll see you guys.